The levels are essentially where we opened on the Nifty. So we're up 120, but it doesn't feel like a vibrant kind of market because nothing incremental seems to have happened, except, of course, stock-specific reactions related to earnings mostly. But there's enough of that. Mithun Aswath is with us, managing partner at Kivah Advisors. Mithun, good to have you with us here. Good afternoon. So we had the Fed meeting last night, and to my mind, it did seem like it's a very significant departure from what we heard from the Fed chair. Do you think it'll come to be that? Will the markets have a bit of a clearer run from a global perspective? I mean, if we believe that the market here is special in the sense that it's the first amongst equals in terms of emerging markets, the global headwind is kind of off. If it is off the radar after the Fed last night, do you think the market can rally into the end of the year? Seasonally, this is a strong time for equities globally.
Yeah, thanks. Good afternoon, Prashant. I think what you mentioned, the Fed has not hiked, and they've kept, the optionality of hiking once more open. But even possibly they are at the end of the hiking cycle. And the markets reacted favorably yesterday with the bond yields in the US coming down to 4.7%. And the tech stocks rallied quite sharply with the Nasdaq up over 1.7%. Now, the rub-off to India will likely happen. And we've seen today, the markets have opened well. But it's still to be seen whether FIs will return. I think the FIs are focused more on events which are, associated with India, which would be the, 5 state elections which are coming up, and then the general election. I think if the incumbent government wins, at least a couple of states in the 5 states elections which are coming up, I think the market then will have a sigh of relief, and you could see actually, institutional investors come back into India in a big way.
By couple, you mean, just to be sure, by couple, Aswath, you mean 2? Or was that said more figuratively? Because that matters a lot. At least two and more. Okay, I got that. Coming back to you, Mithun, but I think Dabbler numbers have just come out.
Yeah, Dabbler numbers have just come out, and they look like it's a mild beat. Definitely on the top line, the company's reported consolidated revenue from operations coming in at around 7.3%. The street was working with a number of around 7.5%, but revenue in constant currency is close to around 10.4%. Operating profit too has posted a growth of about 10%. The EBITDA has come in at 661 crores. The street was working with a number of 645 crores. So as a result of which, the margins have seen a 50 basis points uptick. And this after the company has given their second quarter update as well. As a result of all of this, the net profit has come in at around 515 crores. Domestic volume growth has come in at 3% versus expectations of 4 to 5%, but that's the organic volume growth. If you account for Badshah as well, then the volume growth is close to around 5.8%. So that's largely in line with street expectations itself. The international business on a constant currency basis posted a revenue growth of around 24%. Ad spends for the quarter, remember, the margins have beat expectations despite the ad spends increasing by about 42% year on year. And if you just take a look at their internals, the home care business reported a growth of 15% Ayurvedic and ethicals, which had a high base, grew by just around 8%. Toothpaste business showed a high single-digit growth, but that's still higher than the market because the naturals portfolio in the toothpaste business is not doing too well. And at the same time, the Badshah business, which was expected to show mid-teen sort of growth, has grown at 16.4%. All in all, it looks like it is slightly better than expectations. And that's what the stock price move is also reflecting as well. From a top-line perspective, a mild beat out there. Volumes, including Badshah, better than expectations. EBITDA and net profit above expectations too.
All right. So we'll get the management in a short while from now to talk about those numbers. But we're talking to Mithun. Mithun, thanks for waiting by. You've given us your outlook. It was always good to hear a far more dovish Fed chair. At least that's the way the street has read it. Now tell us about individual stocks. I believe a couple of stocks that are on your radar include Aster DM. The stock traded at a sharp discount. Now the management has been saying numerous times that maybe they look to divest their Middle East business. How do you see things shaping up, and what are the triggers from here on?
Yeah, thanks, Nigel. I think, the healthcare sector, especially the hospitals, you've seen a re-rating post-COVID as, occupancies and normality of surgeries and, improve. And that's happened across the space. Aster DM, has a large business in the GCC area, while the India business would be about 1/3 of their revenues. However, the company is looking to expand the India business using the proceeds that they will get from the potential sale of the international business. And we actually do think, EV to EBITDA at a consolidated level, the company trades at a significant discount, maybe about 40 to 50% discount compared to peers. And the India business itself trades at about 15 times, while, even new listings, smaller companies are trading at over 20, 25 times EV to EBITDA. So we think there's an anomaly in terms of valuation there, and it does present an opportunity with that key trigger of potential unlocking of the GCC business.
All right. Mithun, I remember back in the day, you were also pretty positive on names like Tata Consumer, Marico, and Cera Sanitary Ware. Wondering whether you still continue to hold these names, and what are your thoughts on these companies? They reported their results recently.
Yeah, Mangalam, I think, Cera Sanitary Ware continues to deliver, growth in the region of about 15 to 20%. They've also guided for about 2,900 crores of revenues by September 25. And that also will lead to a CAGR of about 20% from here. So I think that continues to be something that we are very positive on. It's a leader in the faucets and sanitary ware space, and they continue to grow from strength to strength. So no worries there. I think apart from those, the two companies that you mentioned, Tata Consumer, we continue to be quite positive on. It's a company where, the core business is a historical business of salt as well as the, tea and coffee franchises, while they're trying to grow an FMCG business from scratch. And that has been growing now. And we continue to be quite positive on the new initiatives that they've taken, be it on the Sampan space, where they are extending categories across for the FMCG side. For Marico, I think it's been a little bit more lukewarm in terms of numbers. Their core business has still to take off. The volume growth has been quite low. However, we do think in the second half there should be some improvement, and that is what the company is guided for. But what we are positive on these companies is that these companies have been investing in new age businesses, and it's a small part of their overall revenues now, but those businesses are growing at 25 to 30%. And hopefully over the next 3 to 5 years, they will start contributing meaningfully to the overall company.
All right, Mithun, since we're talking stocks, final one before we let you go. BEML, that's another one you're quite optimistic about, right? I think we have Mr. Kalyani, who joins quite often. Ask him what's the update out there. He said that no, we also are waiting. But BEML, your view on the stock from here on?
I think, Bharat Earth Movers obviously benefits from the government's impetus, be it on the railways and the defense side. It's been, not as profitable a company because of the huge employee workforce that they have. But, they have brought down the employee workforce from 12,000 to about 5,000 over the last few years. And the management expects that they will not add new headcount, but revenues are likely to grow appreciably. Especially in the defense and railway verticals. They're guiding for the revenues in the defense space to go to about 1,500 crores. And similarly, even in the defense space. So railways and defense could both contribute 1,500 crores of revenues each this year. And the mining sector could contribute about 2,000 crores. But the opportunity size, we think, in the railways and defense sectors for the company is very large. They themselves expect over the next 3 to 4 years, the company could garner about 4,000 to 5,000 crores annually from the defense and railway spaces. So that's a significant jump from where we are. They also expect EBITDA margins to move up between 100 to 150 basis points over the next couple of years. So we think it's a story where, you're going to see strong revenue growth as well as margin improvement.
All right, Mithun, we'll leave it at that. Thank you so much for joining in, and I guess it'll be festive season before we speak next. So wish you and your family